Hey guys, Monday, the 27th of November, 2023. Hope everyone had a great Thanksgiving out there. So, we're going to get into it straight away here and look at the data calendar for the week. And really, Wednesday, Thursday hopping out as the busiest and best volatility days for trading this week. So, you see today, not much happening. Building permits coming out early in the US there, 1.8% month on month, beat on 1.1. The prior was a negative 4.5. As we go through the rest of this session, new home sales to come as a highlight on today's calendar. Expected at 721,000 coming out in 50 minutes now. That's set to come out below prior 759,000. But as we get into Tuesday, slightly interesting day. Tuesday with because we have CB consumer confidence coming at 3 bells GMT. But we also have Fed's Waller speaking at 3 GMT and FOMC's Bowman speaking then, and Christine Lagarde speaking at 4. Yeah, but coming into Wednesday, here's the big stuff. We got the German CPIs in the morning. Well, actually at 1 o'clock. But the big one, half one, US GDP quarter on quarter set to come out 4.9%. Big old beat on above the prior, which is 2.1. So we know GDP is really strong in the US. The picture is looking good in the US at the moment. Then PC price index, the GDP price index set to come out 3.5% higher than prior 1.7. Retail inventories ex order also coming out at the half one marker. And then, as per usual, DOE. Department of Energy reading for crude oil at 3:30. Then Fed's or FOMC's Mester speaking at 6:45. But Thursday, the big one, core CPIs and CPIs out of Europe at 10 a.m. GMT. But going into the US session, half one, core PCE price index, the Fed's preferred measure here, month on month, set to come out 0.2%, prior 0.3%. And the year on year, the more important one to look at, 3.5%, as the Fed looks kind of for that terminal rate of where they want to get to is 2. Might have been updated to a little higher. But then the initial jobless claims set to come out at the same time, 218,000 set to come out, a beat on the prior 209. And then the headline PC price index, you got the core and then the headline set to 3.1, nicely below the prior 4. The month on month, 0.1 prior 4. Christine Lagarde again talking F1 there at the same time. After that, 25 minutes before the US equities markets open, FOMC's Williams to speak, and then 2:45 Chicago PMI, then pending home sales out of the US at 3. So again, Wednesday, Thursday, the busy ones, and then when we come into Friday, it's a bit of a nothing burger. You have manufacturing PMIs out of the US 245, ISM manufacturing PMIs, and then a little highlight there on Friday, 4 p.m. Fed's Powell to speak. I'm not sure what he's going to be talking about, but we will clarify that live in the room on Friday. So listen, we're not going to go through articles because I don't really see anything wildly interesting to talk about. And so, what is interesting to talk about really on these are the chart. So let's just get over and look at some of these charts. All right, in the NASDAQ. Well, we'll start off with oil actually. So to kind of look at the bigger picture in oil to see where we are here. Yeah, so I mean, oil's still under pressure. For me, the 73.80s was a fantastic area to get involved. We were involved in this last Wednesday after, DOE. By the time DOE, the Department of Energy, the Cushing readings came out, we were already down here on the disruption in the OPEC chat where, they had to pause their talks. OPEC Plus had to pause their talks. A lot of people thought that Russia and Saudi were falling out again, but it actually was because two of the African nations, Angola, and I'm not sure if it was Nigeria, really had to hold up the show and kind of have an agreement on what their quotas are going to be for next year. So we kind of came down here on nothing. What turned out to be nothing. Then we got the DOE. We had APIs of a build of 9.05 million on the night before. So obviously we come down on that as well. But then when we come in and the actual reading then on this candle, right? The reading was, it was only a build of 8 mil. And so boom, up we go. We were mispriced to the downside by 1 million barrels. Up we go again. Lovely trade. A few of us were on that one. So Yahoo, lovely stuff. Now we're back here holding this area 74.16 or 74.18s, call it 18s. Fine, we're taking a bid, but I think, look, if we roll back up to 76.53s here, I think that's just going to be, a better place for people to sell this thing until we get into a seasonal move that will occur most probably next week, which will be buying. And where do I see the buying coming in? Well, from down, down, down in here. And so that's when we can kind of, look to, kind of really my area that I like is 71.30s, right? I like that. And I think this market, even if we test 76.53s, I mean, shit, even if we test up in the 77s, I still think we're going to end up at 71.30s at some point between now and when you're doing your Christmas shopping, right? If you haven't already done it. So that's oil, 71.30s. I like it. I am short some seasonal spreads. I'm flat on the front month spread and not really looking to make my life too busy. But working across the equities space, looking at NASDAQ here. We've looked at some historical data here, and we kind of see that there might be one little last swan song left for equities. Is that going to be NASDAQ into the 16,412s? Well, we look back here. The 16,412s is kind of this little shoulder that we had up here. Going to make this full screen and we kind of look in there. It was kind of a shoulder. Whoops, go in there, here. So it's this kind of high that Gandalf was sitting here at the 16,412s back in September 2021, right? And just let's get in there. What? 1, 2, 3, 4, 5, 6. Let's call it 7 days where, none shall pass. Down we go, right? And so if we kind of jump forward to where we are now, we're kind of mulliking around here. I'm actually going to take off that 16,100. Well, no, I'm going to leave that on for now. I'm just kind of marking these highs here in thin lines as we kind of push up, right? And so it kind of makes sense. We've seen buyers come in on the 15,086, or sorry, 15,806. I think they just want to get it to 16,412s, and then we're gonna need Tom Cruise to step in here and lift this market over that, because failing that happening, I think we're gonna sell down off of there, to be honest, and I just don't see it happening. I do like this area here. I mean, if we had a massive capitulation, okay, it'd be down here, but no. I mean, I like the 15,985s. Bid up into the 16,412s for the week. That's kind of the trade. I don't think we need to pick up buyers 15,806 again, to be honest, to get there. But if we do breach the 15,806, well, then the buyers are going to have to pick it up from this general trend that we have here, right? On the NASDAQ. Do that. It makes a bit more sense, right? It's just a retest on the trend to then bid up. Okay. So that's kind of what I'm looking at there for the week. SPOOs, yeah, kind of a lot going on here, but I've done a bit of investigation. Again, there's one last sort of rally for Santa Claus here. I think it's going to take the SPOOs to 46.05s. And then I just see there's a lot of things lining up there from the all-time high to the trend put in on the high there of the 26th of July this year. And then we have trend confluence coming in with another great level I have at the 46.05. So you got to trade where the confluence is, and you got, ultimately for me, it's you got to trade where you have confluence, where your mind can say, yeah, this makes sense. And you got to stay away from those places where you have dissonance, where your mind is going, I'm not sure if this story makes sense or that story makes sense. Well, you know what? Guess what? No trade, right? Or just wait until you go, oh yeah, okay, now I can see what's happening at this area. So for me, I have a line in the sand here. This has got to hold, right? 45, 49 halves. It's not to the tick, but generally, line in the sands aren't really that. But I think I like this market for 46.05s. And then I think Santa Claus is done. And then we can kind of just flummox down until we get into January, to be honest. So I think that's the last. That'll be the last of the summer wine for the SPOOs. So keep an eye out for that. What does that look like on the intraday chart? Well, we're balanced down here. Offers on the P-val down. We're going to be testing into this area. I think the test is going to go as deep as about 45.38 on the pullback, and and then we'll get into Santa Claus, the last bit of Santa Claus to maybe do that. Now, that's a big move. I think maybe the week could transpire. We could get that. But I don't see fireworks happening today. Wednesday, yeah, probably Wednesday. Thursday, we could jawbone down to here and then rally up to here. These are big moves. That is a big move. Like to chart calculate that. That's going to be a move from a low to high of about 1.4%. Okay, That's not that big. So all right, and I'm going to get rid of this morning trend, which is broken on the reopen there last night. So yeah, that's where I see it. So keep an eye out. 45, say, call it 30s. Let's call it that, right? For the buyers on SPOOs. The S&P 500, that is. And then the Dow. The Dow on our historical look back actually has about 5 or 6 nice days left in the tank here. So can we go for the 35 840s? I say yeah, we can. But today, if we then, just to finish off on the daily chart, right? So you can see here the 35 438. So if I rewind here and have a look back, that was a lovely little ledge high there on the 15th of August last year. Lovely little high. It has been respected on multiple occasions. If I kind of zoom in and roll back here a wee bit, you can see here again, or hold on. There it is there. So you can see again, retest there on the 13th of February this year. Not to mention the tests around December there, but then we kind of roll forward on that 35 438. You see again respect here on the 30th of August this year. And now we're back. So I think, look, what you want to see is we come up there, you see a ton of offers present themselves over that level, and then that's liquidity for the market to move up, hand out sick bags left, right, and center to the sellers, and we lift again. Now, that's one scenario, but for today, what we're seeing is that this thing isn't going to be able to do that right now. Okay, notwithstanding, I don't know, I was saying if Elon was to come out and say he was buying, I don't know, Apple or I don't know, something that's just not going to happen, basically. We're coming down 35 115s. And then I like the long. We're going for Dow. Now, that's another big move. What's that going to be? It's going to be 2% of a jawbone move from low to high on the week here. All right. But hey, we're not out here, making cupcakes. So yeah, that's the Dow. I like that. Stick it in your diary. Call your mom. 35 115's mom long. And forget about the risk. And gold, I like gold actually. Well, it's showing me a lot actually on gold here, right? So we've hit this historical level, which was kind of the high of the 2nd of Feb this year. See that sort of stranded high? Look at that, lovely, right? And we retested again here at that high on the 20th of July. Sold down quite a good bit from about 2000 down to about 1920s. We retested again there in October 30th around Halloween. And hey, look, we're back. Right now, why do I like gold here? Well, I don't think it's going to break out over 2017s today. And you've seen the sellers come in here this morning already on this level, right? You've seen that coming in there. Yeah. But it's holding on BWAP. It's holding on this area high here, 2017s, or call it 2012s. Why do I like it? Well, we're going to need a couple of things to happen here if we're going to get gold over the 2017s and going for a gallop, right? Which would be, I don't know, where is it going to go to? Well, it's probably, I dare say, but I mean, yeah, into probably a test around these lows. I think it'll test around somewhere around here, like 2028. Initially, get some sellers liquidating into that and then push on above. Now, what are you going to need to see that? Well, you're going to need to see a weak dollar. Now, the dollar's just shifted back up here. We were looking at weak. I thought this might happen. 103.58 because it's a quiet day today. But you're going to need a weaker dollar. So you see dollar hit maybe that 2017 high, 103.82s, and then look for your long in gold. But you're also going to need bonds on the front foot, all right? Because gold is competing with the real yield on the bonds all the time. So if the bonds price up, yields and real yields move down. So I think T-notes is not ready to break out over the like treasuries over the 108.22 halves. It's not ready yet, I don't think, to do that. But I think come Wednesday, Thursday, volatility and price action, I think that could be ready to happen. And what you're going to get potentially is a pullback on gold into the 1995s area, which I like, but 2000 as well. Big hole handle. And then we go. And then we go. We come back up here and then we lift all those sellers that are trying to work today. So I like that for the week. Move down into these areas on gold, hold, and then we bid over. Yeah. Those areas, just to be clear, 1995s or 2000. I prefer 1995s, to be honest. I think that's it. That's it for the week. That's it for the look ahead, guys. So listen, stay lucky out there. Do give us a shout. Jump on into the room if you want to join us live. And listen, stay lucky.